Okay, so in my previous video, I forgot to change the name here, which I have corrected right now. And let's start with the remaining task. Uh, I will create a T account. It's basically like a ledger creation. Whatever the accounts we have here, like cash account, equity account, we will separate list for all of those accounts and then prepare the balance sheet and income statement. Mostly I will keep quiet in this video. I will little bit fast forward it as well, so whatever I will do you can just say it. Yep. So start. Okay, so for cash we have know that if I go with the dealer method, right? So DEAA cash is an asset and which goes in a debit side. So what we say is that cash has a debit balance in accounting term, we can say, right? So whatever have in a debit balance, for that debit will be in the major position, like we have to get the total debit and then minus it with the total credits. See, we cannot go with other way around. It's not about that the left side has the majority data, that's why I'm subtracting it to 6900 to 2500. It's just that the debit side will be the up, and then we have to subtract it with the credit side. And the opposite will happen in the equity or liability side because they have the credit balance. So I will just do it right now so you can know it. There are no much data for trade payables or equity, so that's why it won't work. It will be zero only, but I can tell you that it will be opposite, right? So in the right side for liability and equity it will be like subtotal of the credit and minus the subtotal of the all the debits. Cool. Complete opposite what we did here. Now the same thing I have to do with all other accounts. So let me pause the video here. It would be best, whatever I do will be the same thing only. Just give me a minute. I will pause it and play it once again once I done. Okay, so I have copy paste everything from the daybook here. For the balance sheet side, I have to do it for the same for income statement as well. But before that, let me tell you that what change we will do here. For here in the total, what I have done from as you see that all the debit side minus from the credit side, right? And here what we I do, and here nothing, do no data are there, but what we will do here, that is equals to credit minus debit. Sorry, not this. Yeah, this one. It will be like this only. That's what I'm saying. And the same formula copy will go here as well. Control V. There are no value, that's why it's look the same, but that's the thing we will do here. And let me prepare a same thing for the income statement as well. So see you in the next. Expense goes left, all the expense will be debited. all the incomes will be credited. So the same thing I will do here as well. So it's nothing to show you. So let me stop it once again and meet once I have done with that. Cool. Okay, so I'm done with this all the formatting. As you see, we have completed all the tasks like for the balance sheet part also, and for the income statement part also, right? And now with these total values, all we have to do prepared a balance sheet here and the income statement here. So I will just talk less and just format the things. I know that we don't have all the necessary line items. For example, for balance sheet what we have like cash, raw materials, ppe, but there are no account receivable or something like that, no other any current asset and non-current asset. So whatever the line items we have, we will just use them also, them only. We will not prepare a longer P&L sheet or balance sheet. For P&L as well, all we have that revenue, cogs, utility bills and depreciation, that's all. There are no any other expenses or nothing, so I will not stretch it. Not there are any interest expenses or what we say like any tax has been mentioned here, so those items will be not available, and I will not show them as well. And one more thing I have to say that for depreciation also, like we have depreciated it 100 only. And as you know that for depreciation the item when we purchase, let me open it the transaction list. Just give me a minute. Okay. These are the transactions we have just to follow, right? And here it is said that the acquisition of the lemonade stand happened in the 10th of June. So from 10th of June, how much time has passed? June, 10th of June, July, August, just only 2 months has been passed, and we have charged the 10% depreciation because it is mentioned here. But in a natural life or in a real life, what we have do used to, I mean, what we have to done here, that whatever the month has been passed, we just charge those months of depreciation, right? So as I said that it's just an demo example which is not strictly follow the real world use cases. So that's why I'm taking a little bit liberty. But if depreciation would be like for any line item is for 10%, we will also encounter account for month as well. So I know that, but here we didn't do it. So yeah, that's the thing I have to tell now. Let's just prepare the demo balance sheet here, right? So in the for asset side, we have cash, raw material. Let's do the check. Okay, so it didn't match here. Why didn't match? As you know that we haven't increased our equity for the income we have generated, right? So that much money we have to add it here. So let's prepare the income statement first, then we will see the what would be the final net income we have got, right? Okay, so the formation has been completed. Let me put the values then. For cogs, I will put a minus sign. What happened? Cool. Now it's working. Okay, so we see our net profit is this. So let me add back it to our equity. Okay, this is the equity, but I will plus. So now check is completed and our balance sheet has been balanced, right? So yeah, that's all for today's video. I hope I haven't bored you guys. In my previous video I have talked very much. I was, but in this video I was trying to be quiet only and just do the task. So yeah, that's all for today's video.